It's been a swift rise for Bitcoin. At the beginning of August, it passed $3,000 in value. And just 2 weeks later, the currency is trading at more than $4,000. Bitcoin has defied all doubts, even after it split into two versions of cryptocurrency this month. There's now Bitcoin Cash, a lower denominational spin-off of Bitcoin proper. The split was designed to deal with the growing popularity of Bitcoin. It had been struggling to support an increasing number of transactions. Observers wondered if the split would cause the market value of Bitcoin to fall. Instead, it helped Bitcoin stabilize, and that drove international markets to pump more money into it. And according to the CoinDesk Bitcoin Price Index, the cryptocurrency is likely to hit $5,000 per coin by the end of the year.
We are receiving a lot of off-market orders for Bitcoin. They're exploding.
And given political tensions, Bitcoins have become a hedge against economic downturns, pretty much like gold. According to Forbes, 15 new crypto hedge funds trading in Bitcoins are set to launch this year. Already, global Bitcoin funds have raised more than $1.2 billion since May. Despite its stellar returns, Bitcoin has suffered volatility and questions over its security. That's raised concerns that this recent price hike is just a bubble. Saurav Roy, TRT World.
And joining me now from Atlanta in Georgia is Jeffrey Tucker. He's the Director of Content for the Foundation for Economic Education, and he's written extensively about Bitcoin. Jeffrey, welcome back to Money Talks. Great to have you with us as always. Tell us briefly, and for our non-technical audience, what this recent split in Bitcoin is all about. Are there two currencies now? Are they freely exchangeable? What's going on?
Well, there are tens of thousands of currencies, actually, but one main Bitcoin and then one fork called Bitcoin Cash. But the point is, we rode through the fork without any problem. And right now, in Bitcoin land, there is a party going on like never before. It's just been wild to see. You know, imagine going to bed and waking up in the morning and discovering that your assets have increased 10, 15%. That's what it's been like to be a Bitcoin owner over the last week. So yeah, I don't think it's sustainable. I've seen this before. It's not sustainable, but it's a lot of fun while it lasts.
Okay, well, I think this is where we're going now. It's not sustainable, you say. So that begs the question, is this a bubble that is going to burst? And could there be a lot of very sorry people leaving that party you just described?
Well, yeah, there's going to be a lot of sorry people because you know what happens. But, you know, this is like every other stock, every other financial. There's nothing unusual about it. There's a lot of hype and a lot of talk, and people are going to get in. Listen, I've seen this happen again and again since Bitcoin was $14. You know, when it goes up to 30, everybody says, "Oh my goodness, this is great," and they buy in, and suddenly the price collapses down to 12. I mean, this is the way it goes. So there's got a lot of people suffering over the next 30 days. I get it.
Okay,
but that's the way markets work. I would not use the term bubble.
Okay, let's get away from the price for a second to more fundamental issues. Recently, we saw the WannaCry and Petya attacks, and of course, these ransomware attacks, they demanded money for releasing your computer files. And their currency of choice, of course, was Bitcoin. Doesn't that, among many other instances, undermine the credibility of Bitcoin?
I think it's just the opposite. You know, the Bitcoin is the most valued currency in the world today, and because it's a global currency that operates without central banks and central financial authorities. So over the long run, it's got the more staying power than gold or any other option to government monies. So that's very much in a strange, perverse way. It's to its credit. I don't think it says anything bad about Bitcoin. Bitcoin is based on a technology the likes of which the world has never seen before. And it's about information transmittal of mutable packets peer-to-peer around the world, and using cryptography that's uncrackable. So when you have a technology like that, it's got a brilliant future, and you can see it in the markets, right? Because this is no longer just about Bitcoin; it's about a whole class of digital assets based on many different platforms, and they have tens of thousands of names right now. You know, there's, the Ethereum platform has its own scripting language. You can write any kind of code for law, contracts on it, and they're all tokenized. These tokens are available for purchase.
Okay.
There's another really important, there's an important factor here. It's very easy for people to get into these markets as investors, much, much easier than any other public markets. And that's driving a lot of the demand right now.
But amongst all those thousands of other cryptocurrencies that have been created are also some pure and utter scams. I'll give you one example, something called OneCoin. Italy just recently has issued a fine on them of €2.5 million, nearly $3 million. That is purely and utterly a Ponzi scheme. There are others who, there have been many people, innocent people who've been drawn into it. And a lot of this is because of the rise of things like Bitcoin.
This is what's interesting about, I mean, how do I put it? It is interesting. There are more frauds out there than real tokens. That is for sure. But you know what's funny, and I'm not a big speculator in these kind of ICOs and stuff, but you know, I met a guy the other day, a worker here in Atlanta, who buys these things. He doesn't care if they crash or not. Even if he buys 10 coins that don't crash, if he gets one that works,
right,
it's an adventure to him.
Jeffrey Tucker, I'm afraid we're out of time. Would love to chat more, but next time on Money Talks. Thank you.